To most investors, the fact that the market closed positive today would be considered bullish. However, when you're analyzing a candlestick chart and seeing that it did a doji day, opening and closing approximately at the very same level, that tells you there's indecision between the bulls and the bears up here in the overbought area. And there's a very simple doji rule. The price will usually move in the direction of how they open after a doji. If we wake up and see the pre-market futures are opening lower, that's a good indication there's probably some profit taking, probably back to the T-line over the next day or two. On the other hand, a positive open, giving us kind of a doji sandwich, and again with a simple doji rule that the price is usually going to move in the direction of how they open after a doji, means there could be a possibility of coming up here and testing the recent highs. If it doesn't break through this level, then you've got the prospects of a sideways channel again, where we've got the down moves, the sideways moves, the up move back to the top of the channel, and then back down again. But that's not necessarily bad for the candlestick investor. There's always some good short positions to be identified to take advantage of a down move in the markets. The same scenario can be applied to the Nasdaq. Again, a doji type day, if they open it lower, not necessarily meaning the uptrend is over, just might mean there's going to be some consolidation for a day or two, coming back to the T-line, and then next week we'll have to see if the uptrend continues. But the T-line will still be a very important factor. As long as you're trading above the T-line, you've got to assume the uptrend remains in progress. The visual aspects of the candlestick charts allows an investor to see, is there profit taking going on here, and is there a reason for profit taking? And everybody knows the simple adage that gaps get filled. So over here where they have a gap, the price got up to that level and now doing an evening star signal, telling us if this opens weaker tomorrow, it's time to take profits. Not necessarily that the trend is over. It's more than likely might have some backing and filling back to the T-line. So if you're in the stock or calls, you're probably going to run out of some time or have some time eaten up. So you want to take profits, you can always buy back on a J-hook pattern. Because investor sentiment, human nature works the same way after time, that is why we can identify price patterns. Look at Radius, RDUS. This is a big Frypan bottom. You can see the big rounding bottom. You can also see the dimple, and a strong morning star signal that bounced right off the 200-day moving average. The significance of this dimple is that you can measure from this level back to this level where the Frypan bottom started to over here. That same distance should be about where there's a breakout of the Frypan bottom pattern, which means you could be buying in here with the anticipation you're getting close to the breakout, and then the actual breakout occurred. Notice what happened right here at the breakout level. They gapped up through that level, showing strong bullish sentiment. Now you've got a pullback. This is what we call the classic pattern. The Frypan bottom followed by a J-hook. The prerequisite for a J-hook pattern is a strong price move. The expectation of coming out of a Frypan bottom is a strong price move. Now you've got a high probability that if this one opens positive tomorrow, you could have a doji sandwich breaking out into wave 3, making wave 1, wave 2, wave 3 heading up into this direction. Again, this is not rocket science. This is the way price movements occur time after time based upon human nature. The combination of candlestick signals as well as the identification of a pattern, such as the chart pattern on Amazon. We can see there's kind of a rounding bottom It supported off the 200, came up, pulled back, doing a J-hook type pattern with what we call a left-right combo, which is a doji followed by a bullish engulfing signal, one of your strongest candlestick reversal signals, followed by a gap up. Makes it very simple. If they open positive, that tells us they've broken out of this Frypan bottom. There should be a lot more upside. This information or this analysis is based upon how human nature works the same way time after time. All we have to do is identify where those signals and patterns are occurring. That'll be it. We'll see you in the chat rooms.